Okay, let's dive into this. Have you ever looked at the financial news and just thought, what on earth is going on? When everything seems to be going haywire, but you can't quite put your finger on why? Well, that's exactly what we're going to unpack today. How to make sense of those confusing and, yeah, often kind of scary storms in the financial markets.
You know that feeling, right? You see the headlines, that sea of red arrows pointing down, and you feel that little pit in your stomach. That sense of panic starts to creep in. It's an unsettling feeling for pretty much anyone with an eye on their investments or savings. But here's where it gets really weird. You look around, and the actual numbers, the economic data, it all looks pretty solid. People have jobs, companies are selling stuff, everything seems to be humming along just fine. And yet, the market is acting like the sky is falling.
So what gives? That's the big question, isn't it? If the real economy is doing just fine, what is this invisible force that's sending the markets into a nosedive? Well, that's exactly what we're here to figure out.
So, let's put on our detective hats for a second. We're going to start cracking the code behind these market drops that seem to come out of absolutely nowhere.
And here's the thing. The answer, as it turns out, it's not really found in some economic spreadsheet. Nope, it's all about human psychology. Because if there's one single thing that financial markets cannot stand, it's a mystery. They absolutely hate the unknown.
And this brings us right to the main culprit, this idea of political uncertainty. It's just a fancy term for when investors look at what's happening in government, maybe an upcoming election, a trade dispute, a big debate over new regulations, and they just throw their hands up because they can't predict what's going to happen next. And that lack of clarity, that's what spooks them.
And this kicks off a whole chain reaction. See, markets they thrive on predictability. So when future policies on really important stuff like taxes or trade become a giant question mark, investors get nervous. And what do nervous people do? They get cautious. They hit the brakes. They start selling off what they see as risky things, like stocks, and they shuffle their money into what feels like a safer haven, like bonds or even just cash. And all of that frantic buying and selling creates a very visible effect: volatility. The market starts swinging all over the place. And this is where a really crucial skill for any investor comes in. You've got to learn to separate the short-term noise from the true long-term signal.
Think of it this way. On one side, you have the market's weather. These are the short-term swings. It's totally unpredictable, it's chaotic, and it's driven by gut reactions, by fear and headlines. But on the other side, you have the climate. That's the long-term growth. And that is driven by much more powerful and fundamental economic forces.
So let's just ignore the daily weather report for a minute and zoom way out. Let's look at the climate. What are those powerful, you might even say unstoppable forces that are actually pushing the market forward over the long run, totally regardless of all the daily drama?
And this is the perfect way to visualize it. All that political uncertainty, it creates those choppy waves on the surface. They're big, they're scary, they get all the attention on the news. But you know what's truly powerful? The tide. The tide is the deep, underlying force that reshapes the entire shoreline over time.
So what are these powerful tides? Well, they're the real engines of economic growth. First up, you've got innovation, that relentless human drive to create new technologies and just find better ways of doing things. Think about the internet, or renewable energy, or all the advances in medicine. Then there's productivity, our amazing, ever-increasing ability to produce more stuff with less effort. It's what makes economies more and more efficient over time. And finally, and this one is the big one, you have corporate earnings, the actual, real, tangible profits that companies are making. These are the fundamental forces that drive real value in the long run. And you know what? Political storms, as noisy as they are, they rarely stop these forces for very long.
Okay, so what does all of this mean for you, the investor, trying to make sense of it all? How do you use this knowledge to basically stay afloat in the storm? Well, it all comes down to the single most important tool that you have. Because at the end of the day, the greatest advantage in investing isn't some secret stock tip or a magic formula. It's emotional discipline. It's having the mental toughness to see the storm for what it is, which is just temporary weather, and to keep your eyes fixed on that long-term horizon. And really, that's the whole takeaway here. Markets are always going to face uncertainty. That's just a given. Storms will come and go. So the next time you see those red arrows, the next time you feel that little bit of panic creeping in, just ask yourself this one simple question. Am I getting caught up in the drama of the waves, or am I focused on the slow, powerful, and undeniable movement of the tide?